HDFC Standard Life Insurance came out with numbers. Amitabh Chaudhry, who's the MD and CEO of HDFC Standard Life Insurance, joins in with his perspective and to talk about what they made of the numbers this time around and what the outlook looks like going forward for the insurance business.
Growing at the rate of almost 47%, which is much higher than the industry, across all kinds of insurance products. So yes, from a growth perspective, this has been a good quarter. If I look at all the other financial metrics, yes, I would say that, across all financial metrics, we have done quite well. You talked about the growth, but if you look at the margin side of the business, our margins are up to 22.2%. Our return on embedded value is up to 20.4%. Our share of protection business has gone to 27.3% as a percentage of received premium. Our embedded value has grown by 26%. Our profit after tax is up by 18%. Our persistency is up to 86%. So across all financial metrics, and I can go on and on, I think generally the performance has been pretty solid.
If I could ask you a couple of important aspects. One, we all know Q4 traditionally always is the best quarter. So do you see this not only double digit, but the kind of growth that you have seen could be sustained in Q4? And also the more important aspect from a market perspective, do you still think people would gradually learn to read numbers when it comes to insurance company? It would not be a quarter on quarter, rather the 9 months the numbers are important. How do you see that?
So yes, Q4 normally is a big quarter for the industry because of issues around tax, and I guess the sales force wake up in the fourth quarter and try to sell much more in the last quarter of the financial year. We had a very good quarter last year, and that is the fourth quarter of last year. I do expect growth to come in. What that number will be, only time will tell. Another I guess 75 days to go. But yes, industry is growing at a pretty solid pace. Twin benefits of demonetization and clear shift of personal savings to moving towards, I guess, financial assets. And the insurance industry has always, built a pretty large distribution base, so we are getting the benefit of that. What will grow at? Obviously, as I said, time will tell. But gradually, slowly, the number of analysts who are covering insurance, who are getting a better understanding of insurance, the interest in the insurance sector has grown manifold over the last couple of months. And if that happens, I think obviously they'll play a very important role in obviously educating the retail investors, especially because as far as the financial institutional investors are concerned, there are now at least 6 insurance companies which are listed, plus there are 2-3 other companies which have a holding company structure. So there are enough assets to invest in, and they understand the space. But it's the retail investors who don't understand maybe as much. We as HDFC Life today have 3 lakh retail shareholders, so we need to obviously ensure that they're fully educated as they invest in a stock like ours.
If I could ask you if you could throw some light on the whole of your investment kitty, the kind of returns that you are generating, and perhaps would you see FY18 the best when it comes to generating returns sheerly because of the way markets have behaved?
So yes, investment returns are important because that's what determines the return which we provide to our shareholders and our savings products. The returns this year reflect what is happening in the market, so our funds are also performing in a similar fashion as what the other other parts of the market are performing. We do benchmark our returns to other insurance companies and to the indexes which all exist. So yes, this year will be a good year for the customers, but again, insurance is a long-term product, so look at 1 year might not be the right way to look at it. We want investors to think of 10, 15, 20 years here and not 1 year. A great year in terms of returns is also maybe says that there is a year which is going to come where the returns are not going to be great. But overall the returns should be commensurate with what the consumers are expecting, and having a good year obviously helps in that.
What's the mix of your investment portfolio at this point of time?
So right now about 57% is in debt, 43% is in equity. Please understand a lot of the long-term savings products, especially PAR, a lot of the money goes into debt side. Even on the ULIP side, a lot of people, I guess, believe that with the way the returns have been and where the valuations are in the market, maybe it's important to balance some of their investments on the ULIP side also. So right now it is 57-43, but again it has remained in that 55-45 zone for quite some time. So I'm not seeing any very different trends at this point in time.
And if I could ask you also, we are seeing insurance industry as a whole, a lot of consolidation happening. This is a question which keeps coming up at regular intervals. How do you see clearly, would consolidation or inorganic growth would be an option that you would look to further enhance your portfolio?
So firstly, a lot of apparently M&A transactions in the market, and hopefully stars will align one day that the first transaction in life insurance will happen. It hasn't happened as yet. Yes, our shareholders have been quite clear that if the right opportunity comes along, we will definitely look at that M&A opportunity. We now have a currency which can be used to acquire companies, and we will definitely look to acquire companies if they make sense in terms of our strategic direction. Right now, I can assure you that there is absolutely no M&A discussion going on. But as and when the opportunity comes up, we'll definitely look at it. We are a clear acquirer of businesses, of the right kind of businesses, and we don't want to let that opportunity go.
Finally, Mr. Chaudhry, if I could ask you, we all know you had one of the dream debut listing for the industry, of course, and even otherwise when it comes to the whole of equity markets. You are close to inching that 1 lakh crore market cap. How soon do you see that could be achieved?
Well, I wish I determined the stock prices, but firstly, I do want to thank all the shareholders who invested in the HDFC Life IPO and kept their faith with it. I think the way we are being valued today reflects the power of our business, the power of the brand, and the kind of strategic direction which we are showcasing to our investors. So that's good news. But ultimately we should not be driving our businesses based on valuation. We should be driving our businesses and creating long-term value. And I think if we can keep delivering these kind of numbers on a consistent basis, hopefully it will translate into higher share prices also.
One last question, which again I cannot complete this interaction without asking you. Now the listing is over, everything is done. Any calls between you and Max which have been made in the last 2 months?
As I said, there is absolutely no discussion going on any M&A opportunity at this point in time. Our conversation stopped when the deal was called off, and at this point in time there is absolutely no conversation going on. In the future what happens I don't know, but right now no discussion.